Click the bell icon to get latest videos from Ekeeda.
Hello friends, inventories are of three types: raw material inventory, work in progress inventory and finished goods inventory. Raw material inventory means input which remains unused at the end of the year, that is a closing stock at the end of the year which becomes opening stock during the next year. Finished goods inventory means ready to use goods, ready to sell goods which remain unsold at the end of the year are called as closing stock of finished goods which becomes opening stock at the beginning of the next year. Work in progress means semi-finished goods which are started with the production but they are not converted from raw material to finished goods. So they are neither raw material, they are not finished goods, so they will call as what? Work in progress. At the end of the year there will be some semi-finished goods which is called as closing stock of semi-finished goods which becomes opening stock at the beginning of the next year. How to show them in cost sheet, that we are going to understand in this question. From the following particulars, prepare cost sheet showing the components of total cost and profit for the year 31st March 2014. Stock of finished goods as on 1st April 2013. This is the opening stock of finished goods at the beginning of the year. So this has to be added to cost of production. Stock of finished goods as on 31st March 2014. This is closing stock of finished goods. This will be deducted from cost of production. Stock of raw material as on 1st April 2013. This is opening stock of raw material. It will be part of direct material consumption. This will be added to direct material consumed. Stock of raw material as on 31st March 2014. This is closing stock of raw material at the end of the year. This will be deducted from direct materials to find out direct material consumed. Work in progress as on 1st April 2013. This is opening stock of work in progress. This will be added to gross works cost. Work in progress as on 31st March 2014. This is closing stock of work in progress. This will be deducted from gross works cost so that we can find out net works cost. Purchase of raw material. It will be part of direct material consumed. Carriage inwards. This is carriage on purchase of material. So this will become part of direct material consumed. Wages, it's a direct labor, it's part of prime cost. Works manager's salary. Works manager is factory manager, so his salary will be treated as factory overheads. Factory employees salary, same, factory overheads. Factory rent, taxes, insurance, factory overheads. Power expenses, factory overheads. Other production expenses, factory overheads. Sales for the year. This is the last item of cost sheet. Total sales figure is given. Income tax. Now it is an amount payable to government on profit or income earned by the manufacturer. Now this amount will not be included in cost sheet. Dividend received. This is income on shares received by the manufacturer. This is a income for the manufacturer, but it will not become part of cost sheet. Similarly, interest on debenture. It is an income from investment. it will not be forming part of cost sheet. Transfer to sinking fund. This is called as appropriation of profit. Some part of the profit is transferred to sinking fund. Sinking fund means funds which are specially prepared, maintained for replacement of machinery or payment of some liability like debentures. So this item will not be recorded in cost sheet. Goodwill written off. Any item which is written off, like preliminary expenses written off, goodwill written off, it will not be forming part of cost sheet. Selling expenses, selling overheads. General expenses, it is administration overheads. So we have gone through all the items of question. Let us start preparation of cost sheet. The first item is direct material consumed. Here we'll have first opening stock of raw material. That is stock of raw material as given on 1st April 2013. To this we are required to add purchases of raw material, any purchase expenses relating to raw material, like we have carriage on raw material. After adding all these purchase expenses, finally we are required to deduct closing stock of raw material. Opening stock of raw material is rupees 40,000. Purchase of raw materials 4,75,000. Carriage on raw material, carriage inwards rupees 12,500. Closing stock of raw material as on 31st March 2014 rupees 50,000. So direct material consumed we have 4,77,500. Next item we'll have to take direct labor or wages. Here we have wages, direct labor rupees 1,75,000. Wages 1,75,000 added to direct material consumed, we got prime cost 6,52,500. To this we are required to add factory overheads. In factory overheads we have works manager salary rupees 30,000. Next we have factory employee salary 60,000. Next we have factory rent, taxes, insurance 7,250. Next we have power expenses 9,500. Other production expenses 43,000. Total factory overheads are 1,49,750, which will be added to the amount of prime cost so that we can get gross works cost. So we got gross works cost 8,02,250. To the amount of gross works cost, we are required to add opening stock of work in progress, and we have to deduct closing stock of work in progress. Opening stock of work in progress 15,000 and closing stock of work in progress is 10,000. So gross works cost 8,02,250. To this we have added opening stock of work in progress 15,000 and we have subtracted closing stock of work in progress 10,000. So we got net works cost, which is also called as factory cost, rupees 8,07,250. To this we are required to add administration overheads. We have item general expenses, which is administration overheads 32,500. So we got cost of production 8,39,750. To this we are required to add opening stock of finished goods will be added. Closing stock of finished goods will be subtracted. Here we have opening stock of finished goods 6,000, closing stock of finished goods 15,000. Opening stock of finished goods is added, closing stock of finished goods is subtracted. Finally we got cost of goods sold 8,30,750. To this we are required to add selling overheads. Selling expenses rupees 16,000. This will be added to total cost. To total cost of goods sold we have added selling overhead 16,000. So we got now cost of sales or total cost 8,46,750. To this amount we are required to add profit so that finally we can get the amount of sales. Amount of sales is given in the question. Sales for the year 8,60,000. From sales we will deduct total cost. So we got balancing figure of profit 13,250. So in this question we have learned how to give effect to three types of stocks in cost sheet: raw material, work in progress and finished goods. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.